Hello, everyone. Today we're diving into a topic that's making headlines and impacting millions of people, record highs in the stock market. Let's break down what these record highs really mean for your money, your investments, and your financial future. When you hear that the market is reaching new peaks, it's more than just a number on a screen. It's a reflection of the collective optimism and confidence investors have in the economy. A record run is when a major stock index, like the S&P 500 or Dow Jones, climbs to its highest level ever. This is a powerful signal that investors believe in the continued growth and profitability of the companies that make up these indexes. But this isn't just about Wall Street or big corporations. It's about the future of everyday people like you who are invested in the market through retirement accounts, mutual funds, or even individual stocks. When the market hits new highs, it often means the value of your 401k, IRA, or other investments is growing too. When the market rises, so does the value of your retirement accounts. This is your wealth growing. Over time, these gains can make a real difference in your ability to reach your financial goals, whether that's buying a home, sending kids to college, or enjoying a comfortable retirement. A bull market creates a cycle. Rising investments boost confidence, which fuels spending and economic growth. As people feel wealthier, they're more likely to spend, invest, and take risks, which in turn helps businesses grow and hire more workers. But remember, markets don't go up forever. There will be corrections. It's normal for the market to experience ups and downs, and sometimes even sharp drops. These corrections are a healthy part of the investing cycle, helping to prevent bubbles and keep valuations in check. That's why diversification and long-term investing matter. By spreading your investments across different sectors and asset classes, you can help protect yourself from the inevitable downturns and position yourself for long-term growth. When you hear about record highs, know you're not just a bystander, you're participating in this growth. Every contribution you make to your investment accounts, no matter how small, is a step toward building your own financial security. Owning a piece of the global economy is the most proven way to build lasting wealth. By investing, you're taking part in the success of companies around the world and sharing in the rewards as they innovate, expand, and thrive. Stay the course, keep investing, and recognize these highs as a win for your financial future. Remember, the most successful investors are those who stay patient, stick to their plan, and don't let short-term market swings shake their confidence. Your decisions put you in the game. Every choice you make, whether it's setting up automatic contributions, rebalancing your portfolio, or simply staying invested, moves you closer to your goals. This is the power of investing. It's about taking control of your financial destiny and participating in the growth of the world's economy. So keep building your future, one record day at a time. The journey may have its ups and downs, but with every new high, you're one step closer to achieving your dreams. This market momentum isn't just in the US, it's a worldwide phenomenon with investors and analysts across continents taking notice. The energy and optimism are palpable as financial markets from Asia to Europe and beyond are experiencing a wave of record-breaking highs. The Dow Jones in the US, the Nikkei in Tokyo, and major indices in Taiwan and South Korea are all reaching unprecedented levels. These surges aren't isolated events. They're part of a larger, synchronized rally that's sweeping across the globe. These gains reflect broad economic strength, signaling that growth is not limited to a single region or sector. Instead, we're seeing a collective upswing, with businesses, consumers, and investors all contributing to this positive momentum. Europe's major indices, like the FTSE in London, the DAX in Frankfurt, and the STOXX 600, are also thriving. This reflects not only strong business performance, but also growing consumer confidence and robust economic policies across the continent. This synchronized rally means the global economic engine is running on all cylinders, with countries supporting each other's growth through trade, innovation, and investment. The interconnectedness of today's markets amplifies these gains, creating a powerful feedback loop of prosperity. For investors, this is a clear reminder of why global diversification matters. By spreading investments across different regions, you can tap into growth stories unfolding in every corner of the world. By investing internationally, you're not just chasing returns, you're participating in a worldwide narrative of progress, innovation, and opportunity. Your portfolio becomes a reflection of global ambition and resilience. It's not a zero-sum game. Right now, everyone's winning. The rising tide is lifting markets and investors everywhere, creating a sense of shared success and optimism for the future. A globally diversified portfolio is your ticket to resilience and opportunity, helping you weather local downturns while capturing growth wherever it happens. The world's markets are more connected than ever before, with technology and information flowing seamlessly between financial centers. This connectivity means that opportunities and risks are shared, making diversification even more essential. Participate in this global growth and let your investments reflect the exciting, interconnected world we live in today. You might wonder, what about bad news? Like Venezuela's political turmoil. Normally, instability in an oil-producing nation would rattle markets, but this time, investors stayed focused on the bigger picture, strong earnings and global demand. Instead of panic, we saw targeted moves. Some bought defense and oil stocks, anticipating sector-specific impacts. The market's calm shows maturity and confidence in the broader recovery. Don't let scary headlines derail your long-term plan. The pros aren't selling everything over one crisis, and neither should you. Stay disciplined, stay diversified, and keep your eyes on your goals. The market's resilience is your cue to stay the course. Let's look at oil. Venezuela's crisis caused a brief spike in oil prices, but it faded quickly as traders realized the disruption was already priced in. Other countries can ramp up production, and U.S. sanctions have already limited Venezuela's exports. The oil market is complex. Supply, demand, storage, and politics all play a role. For now, there's no panic about a major shortage. This stability in oil prices has helped the stock market stay calm. Energy markets are watching, but not overreacting. The lesson: don't let short-term news shake your long-term strategy. The U.S. is discussing the future of Venezuelan oil with major oil companies. Any real increase in Venezuelan output would take years and massive investment. This isn't a quick fix. The U.S. is planning for long-term energy stability, not immediate price changes. This forward-thinking approach reassures markets and helps prevent panic. For investors, it's a reminder. Headlines are short-term, but real change takes time. Focus on your long-term goals, not daily news. The government's strategic planning is a positive sign for future stability. Your investments benefit from this big picture thinking. Stay focused on your own financial horizon. The market is laser-focused on the Federal Reserve and interest rates. The Fed's decisions affect everything from your loans to corporate growth. Recent swings in the U.S. dollar show how sensitive markets are to economic data and Fed signals. Comments from Fed officials and new data, like weak manufacturing numbers, can move markets instantly. Investors are watching every report for clues about the Fed's next move. If the economy stays strong, rates may remain low, good for stocks. If not, the Fed could act to cool things down. The real drama is in monetary policy, not geopolitical headlines. Every data point is a clue for investors. The Fed's watchful eye is the main event. Stay tuned to the signals that matter. This week brings a flood of crucial economic data. The main focus: U.S. jobs reports, especially Friday's non-farm payrolls. Strong job growth means a healthy economy and supports the market rally. Weak numbers could spark slowdown fears. In Europe, inflation data from Germany and France will be key. Central banks want inflation that's not too hot or too cold. PMI surveys from the US and Europe will show if businesses are growing. These reports set the market's tone for weeks. Watch the data. It's the market's health check. The numbers will tell the real story. Let's talk currencies. The dollar, euro, and yen reflect global economic sentiment. Right now, traders are focused on U.S. economic data and Fed policy, not Venezuela. The dollar's moves mirror expectations for growth and interest rates. Oil-linked currencies like Canada's and Norway's saw brief gains, but the bigger story is global growth. Currency markets are tuned in to jobs, inflation, and central banks. They're ignoring geopolitical noise, another sign of confidence. The flow of money tells us where optimism lies. Stay focused on the fundamentals. Let's pull it all together and step back for a moment to see how all the pieces fit. In today's fast-moving world, it's easy to get caught up in the details, but understanding the broader context is what truly matters. We're in a broad-based bull market, with record highs from New York to Tokyo. Major financial centers around the globe are buzzing with optimism, and the momentum is unmistakable. This reflects real confidence in the global economy, driven by strong corporate profits, relentless innovation, and steady hands at the world's central banks. Businesses are expanding, new technologies are emerging, and investors are responding with enthusiasm. The market is mature, able to distinguish between local crises and true threats. Instead of panicking at every headline, investors are weighing risks carefully and making informed decisions. Investors are demanding proof from economic data, not just running on hope. They're looking for solid numbers, clear trends, and real results before making their moves. The calm in oil prices and strategic U.S. planning add to this sense of stability. When energy markets are steady and policymakers are proactive, it creates a strong foundation for growth. Your long-term diversified investing strategy is being rewarded. By spreading your investments and staying patient, you're benefiting from the market's resilience and growth. Don't get distracted by headlines or daily swings. The news cycle can be noisy, but your focus should remain on your long-term goals and the progress you're making. Focus on the big picture. A stronger economic foundation is being built every day. New opportunities are emerging, and the groundwork for future prosperity is being laid right now. By investing wisely, you're building your own secure future. Every decision you make today helps shape a brighter tomorrow for you and your loved ones. Be proud. You're part of this global success. Your commitment and discipline are helping drive positive change, not just for yourself, but for communities everywhere. Stay the course and keep growing your wealth. Remember, the journey is just as important as the destination, and your efforts today are planting the seeds for lasting prosperity.